Deputy Collins.
There was a number of issues I would like to have raised this afternoon, but the one I will raise, an issue reported in the papers late last week, and it relates to returns by the Irish subsidiary of Apple, Apple Sales International, based in Cork. Now, while Apple Sales International Limited is an unlimited company here and not obliged to make annual returns to the Companies Office, it had to make returns in Australia due to different laws there. And according to those returns, in the years between 2004 and 2009, Apple was able to cut its tax bill by referring to an income tax at lower rates. In these years, Apple calculated its tax with reference to the 12.5% corporate profit tax in Ireland. It should have paid $890 million on this basis, but only paid $36 million to the Irish Exchequer. $36 million is close to the 2% rate Apple claimed it had with Ireland at the US Senate committee last year. In these accounts from 2004 to 2009, Apple does not claim to be using its stateless tax designation. It claims to have availed of income taxed at lower rates. Even a very powerful multinational like Apple is not going to be able to set up its own tax rates, so there's a number of questions that arise from this revelation in Australia last week. Was Apple able to avail of a rate lower than 12.5% between the years 2004 and 2009? If so, what was the rate applied? And then who decided on this lower rate? Before you reply, Taoiseach, we're all very aware of the loophole which allowed not just Apple but a range of big multinationals to effectively avoid tax has been closed from January next year. My question relates specifically to the returns made by Apple in Australia for the years 2004 to 2009 and their claim of income taxed at a lower rate, which this government has refuted over the last year.
Thank you.
Tancora, the issue of effective tax rates has been the subject of a number of public discussions over the last 12 months. It has been acknowledged by the OECD, the European Union and the G20 that international tax planning is an international issue, and the Irish Government is working within these organisations to reach a solution. The recent coverage of multinational profits in the case of Apple was based on historical accounts from 2004 to 2009 that used a stateless company structure. As you know, we addressed the issue of stateless companies in Budget 2014, and the Government is fully committed to the OECD project known as BEPS, Base Erosion and Profit Shifting Project, the international project progressing with support of G20 to deal with this international issue. There has been an allegation that Apple had some kind of a special deal with Ireland. We have consistently rejected the allegation of a special deal, and indeed Mr. Tim Cook, the CEO of Apple, also corrected the record in that regard in May of last year when he spoke at the All Things Digital D10 conference and stated, "We have no special deal with the Irish Government." With regard to the allegation that Apple paid only $36 million on tax on $7.11 billion of profits, I think it's important to clarify that there are two separate scenarios that are often confused in discussions on the effective rate of corporation tax. The first is the global rate of tax, which is paid by multinational companies who operate across a number of jurisdictions. This is a blended rate which takes into account the amount of tax charged from across all countries that a company trades in, and not just in Ireland. The extremely low effective rate figures that have been quoted recently in Apple's case and attributed to Ireland are based on a flawed premise. The figures are estimated by dividing the amount of Irish tax paid by a total profit figure that includes substantial profits made by companies that are not tax resident in Ireland. They are running together the profits earned by group companies in Ireland and in other jurisdictions, and incorrectly suggesting that Irish tax does or should apply to both. Ireland cannot tax profits that are properly attributable to other jurisdictions. The ability of some multinationals to lower their worldwide rate of tax using international structures reflects the global context in which Ireland and indeed all countries operate. The best way to effectively address this issue is for countries to work together at the international level, and the appropriate action is being considered in this regard by the OECD as part of their project on base erosion and profit shifting, and Ireland is participating fully in this process. The second issue is the effective rate of tax applying in individual countries. Clearly, the domestic rate of tax paid in Ireland is within the control of the Irish tax system, and Ireland is responsible for the amount of Irish corporation tax that is charged here. All companies operating in Ireland, domestic businesses and multinationals, are chargeable to corporation tax at the 12.5% rate on the profits that are generated from their trading activities here. A higher 25% rate applies in respect of investment, rental and other non-trading profits, as well as certain petroleum mining and land dealing activities, and chargeable capital gains are taxable at the capital gains tax rate of 33%. Some other countries have a higher headline rate of corporation tax, which is then supplemented by a high number of tax reliefs which reduce the overall rate of tax paid. By contrast, the approach in Ireland is transparent. We have a competitive headline rate of corporation tax which is applied to a broad base.
Deputy Collins. Protecting jobs. Protecting jobs. Would you mind stop interrupting other people in the middle of leaders' questions? Thank you. Well, I don't care whether it's the truth or not. You're not to interrupt. Deputy Collins, please. Shh. Sorry, would you please allow Deputy Collins? Would you please allow Deputy Collins without interruption? Thank you. You got silence when you were speaking. Please give it to Deputy Collins.
I think Taoiseach, that people lost the plot about 2 minutes ago in your reply. The fact of the matter is that Apple Sales International were able to show in their books in returns in Australia that they were able to cut their tax bill by referring to income taxed at lower rates. And that was referred to by reference to 12.5% corporation profit tax. Now, there's something going on here. It doesn't add up. You can't say on one hand that there's no such thing as reduced rates or taxes, and then on the other hand say there is, or there's some way they can get around it. It's quite evident here. 36 million was paid to the Irish Exchequer from Apple. So that money has to come from somewhere. It didn't come from the 12.5% corporation tax. They're not domiciled in Ireland for tax purposes. So why did they pay it? And that answer isn't good enough. It doesn't add up. It just does not add up, Taoiseach. And as far as I'm concerned, someone is telling porkies here in some way. So I think yourself and Apple should get together and find out and present a proper response to this question. Exactly. Bring them into the Finance Committee.
Taoiseach.
Absolutely.
Sorry, would you mind please allowing this?
Excuse me, Count Cole, I've just been accused of something wrong with my tax affairs. So there's nothing wrong with the technical tax affairs. You refute that remark, and you should not be able to say that across the...
Switch off the microphones, please. Deputy O'Donovan, if you wouldn't mind only minding your... Would you please resume your seat? Resume your seat. Would you resume your seat? Would you resume your seat? Deputy O'Donovan, would you mind minding your own business, please?